Hello, everybody. It's the 5th of Feb, and today what I want to do is do a very quick video just talking about the prep that I do every day. So this relates to how I apply my model, which is the two-step model. I used to call this the fib model, and it actually only contains three steps. So step one is find the direction. So this is based on anchoring to a specific time. I use the 9:30. Number two is all I'm doing is then finding a fair value gap. And that's for me, the 5 minutes. And number three is I'm looking for an overlap. So effectively, I'm looking for a confluence between the fair value gap and the fibs. So lots of videos on the channel about what I do every day, but today let's just talk about prep. No charts. Um, if I get a lot of interaction on this video, I'll probably do a deep dive, but I want to keep it simple. All right, so what I actually do before 9:30. So typically I trade New York AM sessions, which starts at 9:30 when the market opens. I normally go to my charts around 8 a.m. So the very first thing that I do is I mark out all the previous day's high, low, and midpoint. If it's a Monday, I will also do the same for the previous week. So all I'm doing is drawing a line across my chart, the high, so the candle, so the weekly candle or the daily candle, the previous day, the high, the low, and just the mid-range, right? So halfway of that full candle. To summarize, what this helps me with is helps me understand where I am at any particular time when I trade off the lower time frames, because as you know, I trade off the 5 minutes. It's also a very useful level for price. Number two, I check the pre-market for any manipulation. So what I'm looking for is something very obvious, very obvious. When you step back and look at the entire pre-market, so that's from 6 p.m. all the way through to 9 o'clock, 9:30, you should sometimes see very obvious manipulation where the price just runs in one direction and then it reverts, right? It reverses. Usually, not all the time, when that happens, what that signals is that price after 9:30 will be moving in the opposite direction. Okay, so that's why I check for that. And I just do that using just any time frame, 30 minutes, 1 hour, all good. 75 minutes sometimes. Number three. Now, this one, pretty straightforward, but I use a tool for this. What I do is I check the 30 minutes and the 60 minutes, that's the 1 hour, and I'm checking price and trend alignment. What does that mean? I'm not going to go too deep into this, but basically, I have a tool that can view all the time frames all at once, and it'll look at X number of bars. So in my case, I look at between 25 and 30 bars. And what I want to see is, are they all trending in the same direction? Specifically the 30 minutes and the 1 hour, okay, because I trade off the 5 minutes. So is the 30 minutes, for example, going up? That's just a trend. I'm not talking about price. And is the 6 minutes also going up? If they're both going up, this helps with my confidence. So if they are correlating together, great, that's trend. I also check the price. So is price correlating with the trend? So in other words, are they moving together? Sometimes price gets away from the trend. So imagine it is a large deviation of price. What happens then is that sometimes when that gap is too big, price will either want to come back. So price, for instance, in an uptrend, price will start coming down, but the trend is still up. Or what will happen is the trend will start to turn down and in effect pull price down with it. Okay, so I call that a misalignment. So I check for that. And I try and avoid trading on days where there's a possible misalignment. Finally, at 8:30, so I start at 8, but at 8:30, I start to mark any recent highs, lows, any swings on the 5 minutes that are obvious. Okay, so I also check, start to mark fair value gaps as well. That's it, just anything that's obvious. Because what it means is once the market opens, that level might become useful, right? It might be a pre-existing level that can act as a continuation to the 930. Sometimes it's not always useful, but sometimes it is. And that's all I do. That's four main things. I had to write this down because I've never actually written this down before because there's so many things I check. Um, I'll say subconsciously, if that's the right word. So I'm not actually actively thinking about it. It's just I'm just looking at it, right? I'm aware of it, if that kind of makes sense. But I had to write this down. What am I actively actually doing every single day? It's just these four things, and it's based on the way I trade. Okay, just based on the way I trade, based on the model that I actually use. So that's pretty much it, folks. I can do a deep dive if I get a lot of interactions or questions. But I hope you enjoyed the video, found something interesting in it, and I'll see you in the next video.